I am Marie Brown and this is Minds in Motion. Thank you for joining my channel where we talk about investing, financial freedom, and how to become the best versions of ourselves. So, what happened in the stock market today that caused the Dow to fall 170 points and lose the 3 day winning streak we were on? First off, chip stocks, which were sensitive to trade news, contribute to today's decline. Micron Technology and Advanced Micron Devices dipped 1.7% and 2.4%. Netflix shares pulled back 3.4% as well. Bank shares such as Citigroup, Bank of America, and JP Morgan Chase all traded lower as Treasury yields pulled back and the benchmark 10-year yield, fell about 5 basis points today. Equities rose sharply on Monday, with the Dow rallying near 250 points as the bond yields paused their recent and sizable decline, temporarily easing the ongoing recession fears. Now, also, the Washington Post and the New York Times both reported that Trump administrators were discussing a cut in payroll taxes as a way to mitigate slower economic growth. A White House official pushed back on the report, saying cutting payroll taxes is not something under consideration at this time. Trump later said on Tuesday that payroll taxes are a matter that he's been thinking about. The central bank cut rates by 25 basis points last month, citing global development and muted inflation. Shares of home improvement retailer Home Depot rose 4.4% on better than expected earnings. However, they warned tariffs could hit consumer spending and cut its full year revenue outlook. Now, Brian Nick, chief investment strategist at Nuvi, stated that the market is back where it was a year ago. And I'm pretty sure you guys have been hearing that on YouTube, where a lot of investors and other YouTubers have been saying that the market is currently flat, and it's been that way over a year. So what he said is that when you're on a roller coaster, the only thing that we can be sure of is that you'll end up where you started. We haven't gone much anywhere because the economy is moving ahead, but the trade war is setting up these intermittent potholes, and the global economy keeps slowing in the background. So when we have markets like these that are up and down the way that they've been up and down lately, what is it that we should do? Also on MSNBC, I saw an article by the investor Ron Barron that I just want to share with you guys today because I think it is a great example of what we should do during times like this. And here's what Ron Barron had to say on CNBC this morning. So I think that this applies to all investors, whether you're a growth stock investor or whether you're a dividend investor, we should all be investing for the long term. No matter, what, if we're picking good stocks, if we're evaluating the stocks that we want to pick, we should be investing in those stocks for the long term unless you're day trading or swing trading. So let's continue with the interview. So the key word that I get here from Ron Barron is to be consistent in your investing. Again, as I said before, if you're choosing good stocks, good index funds, good ETFs, whatever it is that you're choosing to invest in, stay the course, be consistent in your investments. Don't allow fear to have you to make decisions. We don't want to operate off of emotions. We want to operate off of our goals, the goals that we set for ourselves. What is it that we're trying to accomplish with our investments? What is our retirement number? What is it that we plan to get to through our investment? And those are things that we need to focus on during times like this. So there you have it, compound interest or compound growth, however you want to put it. The whole point is to be consistent in your investing. Don't allow what the media's saying, don't allow what the government is doing, and don't allow all of the loud talking, the distractions around you get you off of your investment plan. Stay the course, be consistent, and as Ron Barron said, who is a billionaire investor, just keep investing. He even said that he tends to invest 3 times his normal investment during the times when the markets are volatile and low. You may not choose to do that. However, again, the key that I wanted to make today is don't allow fear to cause you to react to these market conditions that are just temporary. Keep investing, keep your eye on your goal, know what it is that you want to accomplish, and go for your outcome. You guys have an awesome day.